Hi, everyone. Welcome. Appreciate you being here. My name is Dustin Miles. I'm one of the partners of this project. We're super excited to present. It's the Henry at Rosenberg. It's currently called the Fountains at Rosenberg, and so we'll be rebranding it the Henry at Rosenberg. It's 184 units built in 2003. It's a great value add opportunity in a great part of Houston. This is one of the interior pictures. This is one of the upgraded units. And then here's our general disclaimer and financial disclaimer. We spend a ton of time on this, have lots of eyes looking at this. Lenders, property management company, property tax consultants, insurance folks, our other general partners have lots of folks looking at this. We spend a lot of time on this, but we're putting our best foot forward, and then evaluate and see if this deal is right for you. We'd love to partner with you though. This is the exterior of the complex. One thing that we will be doing with this is we will be painting the exterior. So we're excited to kind of give it a fresh look. And here's what we'll be talking about. We'll be talking about the sponsorship team, executive summary, investment highlights, investor projections, financial analysis, property profile, market overview, and then next step. So Hayden and I are partners at Momentum. Excited to bring this project to you. So my background is in engineering. I went to UT Austin for engineering school. And this is actually, so I've done 12 syndications. This will be my 13th, and have had 7 full cycle deals. And then my partner is Hayden Harrington. And we partnered up on a few other deals in the Houston area, totaling $85 million. Those other 2 properties are the Henry at Liberty Hills and the Henry at Deerbrook. And so we're continuing that brand. Our other partners are John Montero. Super excited to partner up with him again. Just has a vast amount of experience, not only in multifamily, but just business in general. Super excited to work with him. And then Miro Calliser is attorney by training, been in real estate, a long time, and then multifamily for a number of years, and just brings a wealth of knowledge, and super excited to have him on the team. And then this is the interior. This is one of the upgrade units that I'd mentioned a little earlier. And then I'll pass it over to Hayden.
Thanks, Dustin, and thank you everybody for joining this evening to go over this presentation with us. We're very excited about this opportunity. Next up, we're going to get into the executive summary. We're going to go over the investment highlights, investment projections. We're going to take a look at the capital stack, and then we're going to look at some cost segregation benefits that we plan to do on this property as well. Here's the investment summary for the Henry at Rosenberg. Like Dustin mentioned, it's originally built in 2003. Calling this an A- deal in a great area, a great submarket of the Houston MSA. It's Rosenberg, Texas, which is southwest Houston, right off 69, which is a major artery right into downtown. So whether residents are working right there in Rosenberg or close proximity to Richmond or Sugar Land, or if they work all the way downtown, they've got easy access to all the major employment centers around Houston. And we're super excited about this particular deal and where it's positioned, just because of the growth that's happening in the Rosenberg and Richmond submarkets of Southwest Houston. Myself personally, I actually have family in this area, probably about 10 minutes from this property. I have family in Richmond, and just have seen the growth taking place over the last few years, which has been incredible. So we're very, very excited about that. On top of that, there's a lot of new homes being built in the area that are north of 350,000, in some cases over 500,000. So the barrier to entry to get in a home is very high as well, which just points to favorable conditions for more renters in the future. Now, here are some of the amenities that the Henry at Rosenberg offers our residents. It's got a 24-hour state-of-the-art fitness center, a swimming pool with an amazing sun deck. It's got picnic areas with barbecue grills throughout the community. It's got tons of space for kids to play, lots of greenery. This is a very low dense community. So we've got over 13 acres for only 184 units. So we have tons of space here. We have Wi-Fi at the pool and clubhouse for residents to enjoy. And then this is a remote controlled access community. And we even plan to be able to access it from your phones with a service called Gatewise that we've implemented at our other assets. It's got a business center for residents to use. It's got planned resident functions, and we plan to continue those once we take over ownership. It's got covered parking and garage parking for residents, as well as storage lockers, which are kind of unique. Not every property offers those as well. So we're very excited about the amenities that it currently offers residents and the opportunity to further enhance them by utilizing some of that green space to actually enhance the property a little bit more and offer them additional amenities. And then here's a little bit more detail about the Henry at Rosenberg and the game plan. We're purchasing this property for $35 million. And it is 184 units built in 2003, bringing about $13 million worth of equity. And then we've got some returns that we'll get into a little bit more later in the presentation too, but you can see some high level returns over there on the right side. And additionally, what we're really excited about is about 74% of the complex is classic or lightly enhanced units that are significantly under market in terms of rent. So this provides us with a great opportunity to really enhance the property by implementing our value add program, by installing our professional management team, like Dustin mentioned earlier in the presentation with Asset Living. We're super excited to be working with them on this project. And then just really enhance the physical appearance of this property because as you can see in some of the earlier pictures, it's currently a yellowish color. And that's one of the things we plan to address very quickly. The great thing about our Henry brand is we've been working with designers and we have our unit finishes already planned out. We have our branding already planned out. We have our color schemes for the interior and exterior of the property already ready to go. And we're already putting it up at some of our other properties. So we're very excited about being able to hit the ground running with this property. We don't have to reinvent the wheel, and then we can carry that look and feel that residents are starting to notice and associate with our Henry brand around Houston at this property as well. So we're very excited about that. We've got incredible feedback on the new upgrades that we've been doing at some of our other assets. People are very excited about the new look, the new feel, in bringing everything to a modern level of finish. And so we're very excited about to be able to bring this to the Henry at Rosenberg as well. And then here is one of the fully upgrades. So only a small portion of the complex actually has this full upgrade program. And the great thing is it fits right in line with the style of upgrade that we plan to do and that we have been doing over at the Henry at Liberty Hills and the Henry at Deerbrook. So we basically have a proven value add program here that we plan to continue, as well as address, like I mentioned before, some of the exterior and amenity updates, which will really bring this property in line with some of the newer properties that have much higher rents, so that we can offer a affordable option for them with the comforts and finishes that they're expecting and modern tenants are used to.
Thank you, Hayden. Really appreciate that. Everyone, my name is Ruben Ortiz. I am the owner of Sayan Renovations and Construction. We are a GC that specializes in multifamily renovations, specifically, large value add properties, asset repositioning. Super excited to be part of the Henry at Rosenberg, be part of such a great team. Total CapEx budget for the Henry at Rosenberg is about $2 million in total interior and exterior budget. $670K dedicated for the interior renovations, $1.2 million for the exterior renovations, and about $150K as part of our contingency plan. Currently, we're working on 2 other Henry properties in the Houston area, which we're executing a very similar CapEx plan for both. We've not only seen a great transformation, but have also received great feedback from residents, from our staff on CapEx improvements. So currently the asset is in great condition. We've inspected plumbing, roofs, the exterior condition, all the major items. and the property itself has been maintained properly. We've identified the areas that do need to be repaired or replaced. And we're super excited to put this CapEx plan into place, and very excited to be part of the team, and hope that you join us.
Thanks, Ruben. I appreciate that. Hey guys, I'm JC Reeves with Asset Living, property management company based here in Houston, Texas, and really excited to be working on the Henry at Rosenberg with Hayden and Dustin. Asset Living is a 100% third party. We have 175,000 units across 38 states. The bulk of our portfolio is based here in Texas with over 500 properties under management. Houston is our corporate office, but also where we have a great concentration of assets across the city with over 23,000 units in the Houston MSA. Again, really excited to be working on this asset. I think, Rosenberg there's such a great story there. And over the past 12 months, much like we've seen across most of our markets, this pocket is no different. It's seen tremendous rent growth, both on new units coming online, new developments, but also on a lot of your renewals. And, we've seen over 15% rent growth on some of our assets in and around this area. One thing for us on these deals that we're really excited about is what Hayden and Dustin bring to the table from their business plan, and being able to achieve that. Working with them on their past two projects, we expect Henry at Rosenberg to be no different. I think one unique thing about this property is the fact that, the previous owner has already kind of provided a good scope and a good proof of concept on these units. And I think the business plan for us here is really just to execute that. So we want to carry what the previous owner did on those upgrades and carry those throughout the rest of the property, bring an experienced regional in with a great on-site manager and staff to really execute across the board. I think that's what really excites us about this project, is the fact that, we know what our business plan is going into it, and we know how to execute it and make this a successful project for everyone involved.
Thanks, JC. Now we're going to get into some of the reasons why we really love this opportunity. One of the big reasons is the value add component to this deal. The Henry at Rosenberg provides us a great basis, an opportunity to implement our value add program in order to both bring rents in line with the comparable properties in the area, as well as trail the future product that may come in the area. There's a large difference between the basis that we're getting at and then the cost to build new product. And so we're very excited about the basis that we're going to be once we take over this asset. And then on top of that, we're just excited about the quality of this asset. It's constructed in 2003, so it has really good bones, and it's made of great materials that are meant to last. Additionally, it has a very large detention system and the opportunity to enhance the common areas and the units to increase the income at the property significantly. This property is not in a flood zone, nor has it ever flooded, but it has this incredible drainage system in the middle of it that we may actually look at putting in a pond with some fountains for residents to enjoy that none of the comps could compete with. On top of that, this area is positioned very well for massive growth in the future. Just in the last 12 months, rents have organically increased almost 16%, and it's expected to continue over the next 12. The Richmond and Rosenberg submarket was one of Houston's top markets for rent growth. In addition to the explosive growth planned for this area, there's limited supply. There's nothing currently under construction, with only one deal that is coming out of lease up and into stabilization, but they have almost $600 a unit higher rents, which offers us a very large ceiling to be able to continue to push rents in line with the comps as well. And then again, here is one of the living rooms of one of the upgraded units, which again is only a minority share of the complex, which we plan to continue to roll out across the remaining units at the complex. It's got updated two-tone color scheme. It's got the gray vinyl plank floors. It's got really unique features with, the bump out in the living room, giving residents a little bit extra space and flexibility with how they use that space. It's more uncommon in apartments to see that. So we're really excited to have that feature here at this community. And here's a little bit more detail on the value add program. As you can see on the left there, you've got dated colors, dated fixtures, dated cabinets with resurfaced countertops, Everything about the classic units just dated and offers a tremendous opportunity to enhance them closer to what is on the right side there, where we have some upgraded units with the new cabinet fronts and pulls, the quartz countertops, updated fixtures and lighting, and it's just a night and day difference from the classic units. And, we're very excited that the majority is on the left, and we actually get excited about that because it offers us that much more opportunity to enhance the complex and raise those rents to be more in line with the comps in the area. And then here's investment overview. So again, it's 184 units. It's got a great average unit size at 910 square feet, built in 2003, and a little over 167,000 rentable square feet. Current occupancy is right at 97%. And again, it's over 13 acres. It's a very low density community, which offers residents tons of space to enjoy with their families. In-place rent per square foot is $1.34 and only $1,217 on average a unit.
Thanks, Aiden. Now we'll talk about the PROFORMA and our 6-year business plan here. So we're doing year one is less than a 10% push. So we like that, quite a bit. The rental growth and within the Rosenberg submarket itself has been over 16%, just organic. And we have a pretty hefty CapEx plan, a good amount of money that we're injecting into the property. So we feel really good about that. Some other things to kind of point out are property taxes. So we work very closely with a property tax consultant, before we offer anything like that, especially in Texas. It's property taxes, and property taxes are such a large portion of the expenses. One thing to kind of note is over that 5-year period, we are increasing taxes, around 70%. So, pretty conservative push, we feel. And then insurance initially underwrote 750. We chopped it around a little bit. So we actually think we can do a little bit better than that, which is great. And then as far as the management fee and all that, because we are working with Asset Living, and this will be our third asset with them in Houston, we're able to get a little lower management fee. So anyways, we work really diligently. We work with our property tax people, our insurance folks. We're working closely with our lender, working closely with our management companies. So this has been vetted by multiple people, and including the people on our team as well. So we feel really good about this moving forward. So here are the projections for the Class A, and the minimum for the Class A is 150,000. And so you can kind of see what year one, year two, year three. That year three, that's assuming a refi. That's why it's a little more elevated. And then cash flows nicely after that year three, once we have the refi. And then you can see we have a matrix in terms of the cap rate. So the reversion cap rate, or that exit cap rate that we underwrote to, is a 4.45, and you can see top end at 4.85, or if we end up selling at a 4.05, you can kind of see the equity multiple delta, all pretty darn attractive. And here are the projections for the Class B. The minimum here is 50,000, and you can see the returns for year one, year two, and again in year three. That's assuming a refinance, so that's why that's a little bit elevated. And then again, want to mention the cap rate delta matrix that we're showing here. Cap rate between a 4.05 and a 4.85, and we underwrote to the one mil. Nice return. Feel this is pretty conservative, especially given the area, given where the demand for multifamily, not only from a vacancy, occupancy perspective, but also from where are you going to put your money. There's stock market's going down, things like that. And this is, a great place to be able to hedge against inflation. This is the capital stack. So the general partners, depends on the class and all that, between 20 and 30%. Limited partners, will be under that, both A class and B class, and then below that is the senior debt. We'll be raising about 13 million on this deal. So we'll talk about the financing, and so the loan will be around that $27 million mark. We're looking at loan to cost 75%, the interest rate at 4.1. So what we're actually doing here is interest rates are going up and all that, and in order to help de-risk the deal and take that variable out, buying a cap, 3-year cap. So our max rate will be between 4 and 4.2. So we kind of just pick something in the middle there, but so we have quite a bit of money set aside for that rate cap, just to take risk out of the deal while interest rates are moving around a little bit. Here's our fee disclosure. So there is a 2% asset management fee and acquisition fee, and then the sponsor comp is between 20 and 30%, depending upon the class of shares. And then for equity investors, the Class B gets 7%, Class A get 8%. And then depending upon if you're Class B, it's a 70-30 split. If it's Class A, it's an 80-20 split. So, and then there's no refinance fee or net disposition fee or any of that stuff. And then we will do, as we do with every deal, we will be doing cost segregation. We've already spoken to our partner there and gotten some feedback there. So on a $150,000 investment, your depreciation that first year is about 106,000, and once we do the study and all that, given that was the estimate we gave, and they do tons of these, so should be pretty darn close to that. And then on $50K investment, the expected paper loss year one is 35,000. So and the company that we work with is Mass Specs, and worked with them, number, I guess, 10 plus times or so. So anyways, super excited to keep that going with them. I'll turn it over to you, Hayden.
Thanks, Dustin. Now we're going to get into the property profile. We're going to look at the details of the property. We're going to take a look at some floor plans, and then we're going to dive into the comparables, really look at the comps, and a sensitivity analysis as well. So again, here are some pictures of the different spaces of some of the units with that upgrade finish, which we plan on continuing on some of the classic units. Just a really great modern scheme, brightens up the space a lot more. And we're really excited about being able to implement this value add program here. Here are some of the property details. Again, some of the stuff we've already touched on: 184 units, built in 03. 1217 is the average effective rent at the complex, and that translates to $1.34 per foot. Average unit size is over 900 square feet at 910. Currently 97% occupied. Net rentable area is 167,368. The exterior is hardy plank siding. It's got PVC plumbing. It's 2-story garden style with 14 buildings and a clubhouse. It's a concrete slab with a pitched 30-year shingle roof. And then the parking lot is concrete paved. It's got copper wiring throughout the property, individually metered. Then water and sewer is sub-metered, and HVAC is all individual in the units as well. So we're very excited about the bones that this property has. It's not only a great property built in the early 2000s, which is great vintage, but it offers all the modern building techniques that are meant to stand the test of time for many years to come. Here is our A1 floor plan. It's 615 square feet, and we've just got a note down there: 13% of the units at this complex are 1 bedroom, 1 bath. So we've got a total of 24 of these units. And as you can see, it offers a great amount of space. 615 square feet is a great amount of space for just 1 bedroom. It's not like those 400 or 500 square foot units that are very, very cramped. It offers plenty of space in the bedroom, living areas, kitchen, so forth. So this is a great floor plan, and it's only 13% of the complex, which we like as well, because the majority are actually 2s and 3s, which we're about to see here in just a minute. Here is our B1. So starting with those 2 bedrooms, we got a 2-bed, 1-bath, 822 square feet. And again, the note down here, almost 70% of the units are 2 bedrooms. So offers residents a lot of flexibility if they want to make one of those units an office and have a work from home situation. They have that flexibility to do that. If they want to get a roommate and really cut down on that rent, they have that option too. If they've got family members or they have kids, it just works for every need that residents might have. And then as you can see here, again, it's got that awesome bump out in the living, or if you want to make that your dining area. It's got a great open kitchen. It's just got plenty of space for residents to really enjoy their unit. And then here's the B2. So now we're getting into our 2-bed, 2-bath. This is 933 square feet. So as you can see, if you want to have that extra bath attached to your bedroom, we have that option for you as well. And then here's our B3, which is 973 square feet, 2-bed, 2-bath. So the difference on these is it just gives you a little bit extra square footage for those families that need just a little bit extra space. So we've got a wide spectrum of offerings in the 2-bedroom category. We've got the 2-bed, 1-bath, we've got the smaller 2-2, and then the larger 2-2 as well. So just gives residents a lot of flexibility depending on what they're really looking for to fit their needs. Now we have our C1, which is our first 3-bed, 2-bath, which is 1,135 square feet. Good size unit that offers a lot of space for residents. And then on this unit at the bottom of your screen, you can see it's got a patio with a storage room as well. So really the only difference between the 2 3-bedroom floor plans is one will have a larger living room and one will have, like you see here, it will have a little bit smaller living room, but with a patio and extra storage. Again, just kind of catering to the need of the individual or need of the family. If you want to be able to enjoy time outside, set up some chairs and a table on your patio and enjoy the evenings, this unit offers the ability to do so. Now here is our C2. So 1,177 square feet, 3-bed, 2-bath. So as you can see, you get a little extra interior square footage, and the really only difference is that living room space. Where the patio is, you just get a little bit more room to spread out if you're one that's not to use your patio as much as somebody else. This is a great offering as well.
Thanks, Hayden. Super excited about this deal. As you can see below, there's a huge delta between where we're at and where the comps are at. So we, obviously we really like that quite a bit. So diving into it a little bit more, huge delta, as you can see, everything's very, very well occupied. Even the deal that's in lease up right now is, already at 90% and probably north of that by now. Very similar size units, and there's a huge delta between that new property and where we're at. Obviously, it's a nice property and all that, but we have that ceiling just got that much higher. In any deals, there's no planned deals in the works, but if anybody does build in the future, they're more than likely going to be north of that. Seeing as how building prices and labor and materials just and land keeps going up. So super excited about that delta. We've seen that at one of our other properties there. Someone did end up building and they just basically just raised our ceiling. Here's just again kind of illustrating that comp story, and so just really excited about that spread. And that this is where you want to be when you're looking at deals. At least for us, when we're looking at deals, we want to be we want to be on that lower end, and we want to be able to kind of stay below some of the leaders and all that. But we're putting quite a bit of money into the property. We're putting in around $7,000 a door, and so super excited to be able to kind of bring this property up to near the levels of some of these other guys. And then here's a sensitivity analysis on as far as the vacancy. We have you could see from the one of the previous slides, everything was, even the lease up was 90 plus. And so, feel really confident, about obviously about the pocket, about the area, in, Houston in general and Texas. But this is just kind of showing, kind of a worst case scenario situation. So, anyways, makes you feel good. And then the background is our pictures of the upgrade units, just to kind of give you a sample of what that looks like. And then we will be talking about a market overview, the economic drivers, employers and jobs, and then the local economy. Our property is, it's nice property. It has great amenities. It's offered, it's an affordable option, within that pocket, but still offers some, similar amenities to some of the more expensive properties. We really like where this is positioned. We like that it's, next to Richmond, next to Sugar Land and Katy, which are, experiencing a ton of growth. And so, just really excited about this property in general. Most of the units are not, only a small portion, have been upgraded. So we like that quite a bit. There are, there's lots of activity, lots of building, neighborhoods being installed that we'll kind of talk about a little bit later. But just really excited about this deal.
Thanks, Dustin. Hi, everyone. This is Cherry Chen speaking. I've been a partner with Dustin Hayden, part of the Momentum Multifamily Group for 2 other projects. This is our 3rd project together. And really like, the Fountains of Rosenberg asset, very similar to our prior 2 deals as well. And here, just to talk a little bit more about the surrounding retail communities where our property is located, just to give investors a better idea. You've probably heard location is really important in real estate. So these next slides will serve to highlight that, provide you with a little bit more information of the surrounding community. So what you see here on this slide as one of several examples of new, big builders coming in and building single family home developments. This one is from Lennar, and you can see the price range of these homes are around $388,000 to $563,000. And this is just one of several, along with what you see listed with History Maker Homes and Castle Rock communities as well, coming into Rosenberg, and really supported by the demographics and the population to provide housing, right? So we're in the same boat, and along with these developments are also surrounded by local attractions and amenities. All of these are really just 5-10 minutes away down Interstate 69, so very close to our property as well. Just to give you a better idea and color of the community surrounding our property. Here, you'll see the Brazos Town Center, which is also just down Interstate 69 for the residents. And also you see the broad range of retail, which again provides more jobs. And you can see it's a big area here with over 100 acres of retail, including, single family, multifamily, but also the typical staples of medical professional office parks and the associated restaurants and retails with that. So you can see the photo there and examples of some of the shops: Target, Home Depot, Home Goods, Academy, part of every staple of every community. And you see Kroger, Chick-fil-A, the surrounding restaurants and retail there as well. So again, this is all just 5-10 minutes down the highway from the property here at Rosenberg. And Amazon does not need really an introduction, but once again, they move to where all the people are. And so this, one of the biggest fulfillment centers here was built, I believe, 18 months ago, give or take. And so far have hired about 1,300 employees and continue to be growing. And it's estimated that, this will be probably employing up to 3,000 people by the end of the year. And so Amazon, like I said, doesn't need introduction, just more evidence of the growth that's around Rosenberg and supports the thesis for the population and the tenant base that we have.
Thank you, Cherry. Hi, everybody. So glad to be here. My name is Vanessa Peters, and very excited to be working with Dustin and Hayden and Momentum Multifamily again on our third project together. It's such an exciting part of the country to be working together on. Love Houston. I'm going to review some of the business districts in Houston. A lot of businesses are here. There are 51 million square foot of office space, and actually now there's 25 Fortune 500 companies, which is the largest concentration of headquarters in the U.S. And Walmart is the biggest employer at 37,000, and right after that is the Memorial Hermann Medical Center at 24,000. Just a lot of business coming in here, and lots of sports stadiums, and Exxon Mobil is actually moving their headquarters to North Houston as well, coming soon. I'm moving on to solid demographics and fundamentals on the next slide. The properties in Rosenberg, particularly, it's a very affluent area, lots of new home developments, as was already mentioned, and rents in this area have increased almost 16% over the past 12 months, and that is a phenomenal growth. And of course, we're not going to assume that that is the case going forward, but it does portend very well for this property. And the property is just located south of the 69 freeway, and there's a lot of development going on in that area. Lots of growth, new businesses will be coming in, and some very affluent homes being built as well. Also, the market in Houston is still more affordable than Dallas and Austin, with lower rents on average. So people are moving like crazy to Houston, adding 1.2 million people in the last decade, and tons of population growth, 24%. And so this is a great place for us to be positioned. I mean, like I said, I'm excited to be part of this project. I work in different areas, but always love to invest in Houston.
Thank you, Vanessa. Now we're going to get into the rent versus own. So we're going to really take a look at what is the barrier to entry to get into a home in this area, and what is the delta or the difference between that and what it costs to rent. So as you can see over here, we've got some interesting statistics, and this is all according to RealPage Analytics and our business plan, and then the actual home prices in the area that of homes that are on the market right now. So according to RealPage, from 2009 to 2019, the homes in this area averaged 6.41% year-over-year increase in value, which that is very, very strong. So we basically grew that over time to just see what that looks like over time and how that compares to our business plan. So as you can see up there, we've got years 1 through 10. This is mirrors our business plan. So we've got the Henry. Those are the average rents across the complex that we're looking to charge. And then what it would cost to own in the area based on current home values and the likely increases that we're going to see, because over the last decade, like I said, it averaged 6.41% year over year, and there's only more people moving in this area. So basically grew that out over the next decade to see what that looks like. And as you can see, it's kind of exponential on the home side, where it outpaces the growth of our rent projections by quite a bit. So we've got a very large delta between what it costs to not only your monthly payment if you want to own, but also that down payment that's required for getting into a home as well is only going up. Right now, on average, it's about $36,000 in this area. And as these home prices increase, that's going to go up as well. And then you've got a really significant delta, starting out the gate, $700 more to get into a home on top of that $36,000 that you have to shell out to begin with. So then you can kind of see how that delta is over time. And as you can see, it really just widens that gap. So we're excited about this. The homes that are coming in the area are very nice homes. We looked at some of the pictures earlier. We got some great home builders coming into the area, and they're building a very, very nice product with well thought out neighborhoods and communities. Now we're going to get into the demographic snapshot of the Henry at Rosenberg and the Houston MSA. Real quick, I'm going to just run through some of the statistics on the left there. We've got Houston was ranked an A+ by niche.com for diversity. It ranks number 2 as one of the top metros for corporate facility investments. So got a lot of new companies, a lot of new jobs coming in. Ranks number 3 as one of the top global cities of the future. And then almost 300,000 jobs are to be added over the next 5 years. So some really exciting stuff happening in the Houston area. And then over on the right here, we've just got some demographics for the Rosenberg and Houston MSA. And then as you can see there, we've got the population growth year over year, which is really interesting for the major Texas metros. We got Houston, Austin, and DFW there. Obviously, Austin's kind of leading the pack. It's the hottest market in Texas at the moment. But right behind that is Houston expected to average 1.45% over the next 5 years in terms of population growth year over year, which actually outpaces Dallas. So that's kind of a surprising, and that's according to RealPage Market Analytics. So some exciting stuff happening in all the major Texas metros, and we're very excited about what's going on in Houston in particular, because that's where we're expanding our portfolio. And then at top there, you can see we've got household income over $70,000, so really strong. It's only continuing to go up. And then we got a lot of people moving into the area too. Like you've seen in earlier slides, we've got a lot of brand new homes. This area is just exploding. 69 is a great artery into Houston, Sugarland, all these major employment centers, lots of hospitals in that area as well. So we're excited about the positioning and just the expansion that's pushing out west of Houston. And we're very excited about this opportunity.
Well, thanks, Hayden. This is John Montero. Thanks for joining us tonight. I'm extremely excited about this opportunity in partnering with Dustin and Hayden and the Momentum team. I am one half of Revision Masters. Meryl Calliser, who is my partner, unfortunately could not attend, so I'll be representing the both of us. I have partnered with the Momentum team on all of the Henry projects. So Henry at Liberty Hills, Henry at Deerbrook, and now this project, Henry at Rosenberg. So very excited about this opportunity. I'm going to talk a little bit about Houston and Texas and kind of the macro view of why we like this market. As a little bit more of a background on myself, I'm based here in Frisco, Texas, just north of Dallas. I moved here in 2009 in the depths of the last recession and moved my family from Hawaii for exactly what we've seen as a run-up in opportunity over the last decade. Moved to Frisco with no friends, no family, and it's been a phenomenal move for myself and my family and my business partners, and ultimately our investors as well. I am actually an econ major and an MBA in my undergraduate and graduate work. And so I'm constantly tracking trends and cycles and data. I'm a bit of an econ nerd, love tracking data. And that kind of has led me to partnering with good folks like Dustin Hayden and investing in assets in phenomenal geographic submarkets and locations. So let me just jump into Houston a little bit. So as you can see here on this slide, the diversity of the Houston economy. What a lot of people kind of get wrong is many folks kind of read the headline risk around oil and gas exposure in the Houston submarket. But as you can see here on this slide, it's extremely diverse. That may have been true with regards to the density of oil and gas in the economy maybe a decade or two ago, but it is currently very much more diverse and really not an issue with regards to the price of gas, the price of oil, et cetera, et cetera. So we like that in terms of investing in markets that have that diversity. So specifically as to why Houston, beyond the job diversity slide here. But the population growth, and we'll get to it in another slide here in a second, has been phenomenal over the last decade. There's forecasts that the population by 2030, which is only 8 years from now, is going to add another 1 million plus people moving here. The in-migration is absolutely incredible. And I think post-COVID, that acceleration of jobs and people moving here is going to continue into the future. As a result, there's a huge workforce housing demand for apartments. And another reason why we like this market. So you can see here, I won't go through all the different bullet points here, but Houston as a metro has a lot going for it, which then lends itself extremely well to the apartment business, and specifically this asset that we are purchasing. You'll see here, it's best city to live. It's one of the friendliest cities, great for families, great for jobs, great for entrepreneurs. The job growth and the number of companies moving here are always at the top of the list for the entire nation. You'll see there the fourth one from the bottom. I'll just pull that one out. Cities where your paychecks will go the furthest. That's an important one right now, especially with what we're seeing in inflation. With inflation in food prices and gasoline prices to fill up your car, you've got to be in a place where your dollar goes further. And so this is a great bullet point here, where one's paycheck will go further. And at the end of the day, where does the paycheck go first? It always goes towards food and housing. And that's why we like this multifamily space. So again, a little bit more around why we like Houston. Houston is home of 23 of the Fortune 500 headquarters in the Houston metro. We'll also show that over the last 10 years, 1.2 million people have moved here. And as I'd mentioned previously, there's probably another 1.2 that will be moving here over the next decade as well, so that the population and job growth continues to be extremely strong. And so, with all of that, what that creates is a chronic housing shortage in the Houston MSA. And with a chronic housing shortage of supply and demand imbalance, that really results in a couple things. Number one, and we're seeing it today, record rent growth. You'll see at the bottom paragraph there that asking rents have expanded by 16% over the last 12 months. That is very much driven by the fact that we've got more demand coming in with limited supply in housing. So that is going to continue to persist in the future. The other thing that all of this imbalance is resulting in is record occupancy. So we are seeing record occupancy across our existing portfolio, Henry portfolio, but also across the entire Houston submarket. And we think that record occupancy is going to continue to persist in the future because of all the folks that are moving here. The last thing I'll end with is, multifamily is a phenomenal inflation hedge. I'd mentioned inflation a little bit just now. We're seeing it across the board, as I'm sure everybody knows and feels it in the wallet a little bit. But as a multifamily owner, where that benefits us is in two areas. One is rent growth. Rent growth is going to continue to push higher as a result of inflation. And then secondly, and I think even more importantly, is that inflation will drive asset prices up over the medium to long term. So what we want to do with our investors is acquire solid assets in a great submarket and let the inflation take that into the future, where we'll be able to take advantage of those rising asset prices in the future. So that's pretty much it for me. Thank you again for everyone joining us tonight, and hopefully we'll be able to partner with you on this opportunity.
Thanks, John. And again, just to reiterate, we are very excited about this opportunity. It's not only in a market that we believe in and know extremely well, we're also operating in as well. So we're very excited to add this to the Henry portfolio. If this is something that you're interested in getting involved with and investing in, here are the 4 steps that'll take place over the next few weeks. Step 1 is just to review the documents, review all the details. If you have any questions, feel free to reach out to us. And then step 2 is to complete all the paperwork, including your subscription agreement, PPM, and operating agreement, and investor questionnaire. Step 3 is to fund. The team will review your submission and then reach out to you with the wiring instructions. And spots are not reserved until funds have been wired. So we highly suggest, if this does look interesting to you, to complete your paperwork and funding as quick as possible. And then step 4 is we close on the property. We're expected to close around mid-July. It may happen a little sooner. It may happen a little after. Our last deal did close in about 41 business days. So we expect this deal to fill up very quickly and close very quickly as well. And then here is some of the investment criteria. Again, this is a 506B offering that is open to both accredited and sophisticated investors. You have some options with investing. You can do cash, IRA, solo 401k, or a combination, whatever you prefer. And then funding, the minimum investment for this offering is $50,000. And then again, we have the Class A, which is $150,000 minimum if you want a little bit better returns as well. Both classes are great returns and great options, just depending on funds available and what you're looking for in terms of your investment criteria. And then reserve. Again, this is first come, first serve investment opportunity. Do not wait around. The last one went very quickly, and we expect this one to fill up very quickly as well.
Thanks, Hayden. Yeah. So again, if this is something that you're interested in, then I'd love to partner with you. We do monthly updates, complete with all financials, bank statements, all that good stuff. But we also do something a little bit different than what we've seen with other groups is we do an investment letter as well. So lots of pictures. Obviously, we're spending a lot of money at the property. There's going to be lots of upgrades going on, and so we like to kind of catalog that and take pictures and kind of invite you to as our partner and step-by-step part of the project and part of the process. And so you get to see, those before and after and those changes as we, help. Obviously it's a nice asset, but we, kind of take it to that next step. So, hope you'll join us. We're super excited about this deal. So one kind of common question we get is, how much are the general partners investing into the deal? I know I'm personally putting in, at least 100,000. And then the general partners all together, we're putting in, $1 million. And then as far as distributions, we expect those to start 6 to 9 months after we close. This will just kind of give us a chance to get our upgrade plan going. We have a great team. There's a lot of continuity, so that helps. We have our regional that is the regional over our other 2 properties. She's going to be the regional for this one, same management company. So we have a lot of continuity, so that'll be great. And then we have also continuity on the construction side as well, with Ruben and his company and his guys helping. And so and we already have our colors picked out. We already have what our upgrade package looks like, so we've been doing that at the other properties as well. We already have our designers, so we have we're not reinventing the wheel. It's hate to say it's just kind of rinse and repeat, but there is we do have our processes in place, so there is some of that for sure. And so we've worked hard on that, kind of help speed things along. This property, this asset, the Henriette Rosenberg, is not flood zone and has never flooded. And then just people ask about the economy and all that. In this pocket, there's a lot of diversity, a lot of big box retailers, large hospitals. Amazon has a large presence in the area as well. And then, Houston's population is set to grow by 16% by 2025, and that's it's a lot of people. And then it's the third highest percentage of job growth in the country. And I know, Houston, along with DFW, grew more than any other metros in the country over the past 10 years, and that projection, and that's only supposed to continue over the next 10. So we're really excited about this opportunity, about Houston, about this submarket in general. And then, again, here's a picture of the asset. It's a nice, super nice, clean asset. As we've discussed, there's pretty big gap between where where home values are at, or I'm sorry, where the cost of buying a home versus renting, and that gap in this submarket, it's only widening, and we watch that pretty carefully. And so nice clean asset, low crime, great area, good schools. They're installing new neighborhoods in behind us, and where you have access to the freeways. You're not too far from downtown Houston, about half an hour. So we love this asset. I think it'll be a great one for us, and hope you'll join us. Thank you.